Jensen Huang is trying to save the stock market right now. Look, this video is going to be dense. It's not designed to maximize the algorithm. We're going to talk about some of the information, some of the data that's scaring the shit out of investors right now, and why Jensen's trying to do some major damage control. Yes, it's only a 5.5% dip on the Qs. That's virtually nothing. We've seen that many a times before. But if we look into it a little bit more, I mean, we can see Palantir is getting killed. Salesforce is getting killed. These are massive software companies. People are labeling this the SaaS apocalypse. Software as a service businesses are getting absolutely destroyed because people think AI is going to replace a lot of the software. If you don't have the attention span to stick around, I don't blame you, but I do promise this will be a lot of valuable information to consider going forward. In short, Jensen Huang just had an interview with CNBC where he did his normal thing. He's a salesman for AI, right? He's going to go out there, tell you what you want to hear, especially as an investor. And when that happens, stock go up. Nvidia up almost 8%. That's probably one of its biggest moves in recent history. A wise man once said, the ability to consider an idea without necessarily accepting it is a hallmark of an educated mind. That's Aristotle. So what we're going to do, obviously I'm biased as an engineer. I always lean towards the side of innovative technology and investing in that technology going forward. We all know Jensen Huang is the best AI salesman that exists on this planet. So some of the stuff he says doesn't seem to be completely backed up by facts. And I want to investigate the counter to the things that I believe. Listen, I've made like 25 videos on this channel already going into Nvidia, so you already know where my investments are in companies like Nvidia, and likewise, I talked about buying Nvidia for years now. So what would be super valuable? We're going to challenge Jensen, watch the video, and try to counter the things that he's bringing up and base it in facts, because at the end of the day, that's all that really matters. So let's get started.
What's your take from that, the way the market continues to react to this?
Demand is sky high.
Demand is sky high. Yes, that is obviously true for Nvidia. Jensen Huang. They literally have visibility into like $500 billion of revenue. So yes, demand is high for Nvidia. They are the destination for all of this CapEx spend. We just saw Amazon say they're going to spend $200 billion on capital expenditures. Where do you think that money's going? Yes, probably to develop their own chips, but also to Nvidia. $600 billion from 4 companies. Let that sink in for a second. To give some perspective on just how absurd this build out is, the world's largest mega projects that are currently under construction. This rail network right here is essentially a transportation system throughout all of Europe. 1,600 plus miles of infrastructure building out here. Yes, artificial intelligence spending from 4 companies is greater than that. The damn Manhattan Project doesn't even hold a candle to the size of build out that we're talking about here. The Manhattan Project building the nuclear bomb was like 30 to 50 billion dollars. It's 1/20th of the build out by the 4 biggest hyperscalers in the world today. And goddamn, man, Cillian Murphy is so sick. Anyway, so I feel like I'm just backing up Jensen's point here, but we got to look at the counter to this. This is a survey of 252 C-suite and VP level executives at companies with over 1,000 employees. So it's important to consider that this article isn't necessarily representative of you or I or our opinion, but the opinion of people who run companies and are paying for AI services or not paying for AI service for whatever reason, training people with AI, seeing what the most common barrier is to get people to embrace AI. And I think if we just look at the highest level, the key findings here, 52% say understanding how to use AI is a critical barrier. Again, when we hear Jensen say demand is sky high, but most leaders don't even know how to use AI, they just think it could provide some value. That could be a problem down the line. 40% of leaders expect 50% or more of their core processes to be AI augmented in the next 2 years. So it's good to see that people are embracing it, but at the end of the day, that doesn't really translate into profit for these companies. Your Amazons, your Metas, your Microsofts, your Googles, right? The guy's spending 20 times what Cillian Murphy was spending to build the damn nuclear missile. But what about people like you and me? What about the average user? ChatGPT just hit 900 million weekly users. That's incredible. It came out just about 3 years ago. But here's the killer. 5% pay premium, whether it's their $20 a month plus subscription or their $200 a month pro. Clearly, people aren't buying in too much right now. 5% of 900 million. That's a lot of people. That's 45 million people still. But we'll save the math. The point is, the demand, it looks sky high on the surface, but when you look a little deeper, it doesn't look like anybody really knows how useful these chatbots are.
We're in the once-in-a-generation infrastructure build-out. This is the largest infrastructure build-out in human history.
That's facts. We can't argue with that one.
An inflection point in AI. AI became super useful.
Super useful. 5% of people pay for premium. Now, I don't know about you, but if something was super useful, then I think most people would pay to use it. Something that's super useful is like a, I don't know, refrigerator or washing machine for your clothes. That's something everybody, if they have the money to do so, will pay for it. And in this case, we're talking about something that's $20 a month. It's not exactly breaking the bank, right? Now, obviously for a company like Palantir, company who's selling an AI-based software to businesses, to governments to assist in making the best decisions during war. Yeah, no, that's pretty useful. But I guess the point is the data is telling us that a lot of people don't think it's useful enough to justify paying a somewhat, I think we could probably all agree, decent price.
No longer hallucinating.
That's cap. AI is no longer hallucinating. We all know that one's not true. Just a couple weeks ago, we had some analysis done on papers released by these rather prestigious universities, right? NYU, Harvard, Columbia, big companies like Nvidia, which is ironic. We have Jensen saying there's no hallucinations yet. Papers that they're releasing contain straight up false information. This was detected by GPT-0. I'm going to take their word for it. I looked into it a little bit. It seems pretty legit. You can look into it more if you like. The point is, hallucinations are just made up references to documents, to websites, to data that's not actually true or just don't even exist at all. And if that's not enough to believe that AI hallucinations are a thing of the past, just a few days ago, we have an instance where a judge is fining lawyers as they included non-existent quotations and case citations that were generated by artificial intelligence. That's hallucination. Not too long ago. So yes, obviously AI is getting a little better, but to say there's no longer hallucinations is straight up false. Remember, at the end of the day, AI is just a prediction mechanism, right? It's trained on data, it tries to recognize a pattern, and then spits out an output based on the patterns that it's learned in the past. That means there will always be some error, at least the way that LLMs work today. So this is false, but makes for a good headline.
All of a sudden, AI over the last couple of years went from being curious to super useful. The inflection point also came with it, profitable tokens. Anthropic is making great money. OpenAI is making great money. If they could have twice as much compute, the revenues would go up 4 times as much.
Wait, let's hear that again.
Profitable tokens. Anthropic is making great money. OpenAI is making great money. If they
OpenAI and Anthropic are making great money. Oh man, let's get into this one. So if we assume only 5% of ChatGPT users pay the premium price, then do you really believe that 2 times the compute would encourage another 15% of users to pay? Another 135 million people, because they have 2 times more compute. Well, a good way to evaluate that is how much more useful does a model get with 2 times more compute? That's easy, right? We're not going to get to the specifics about what benchmark is best for measuring LLMs and what use cases. No, we're going to look at this accuracy benchmark and compare, well, with a 2 times increase in compute, how much better does the model get? How much more accurate? I'll do you one better. Instead of 2 times compute, what if we go a whole nother order? 10x. We can see there's instances where the accuracy from, let's say, DeepSeek R1 in this case, to another model in Claude with a 10x increase in compute, increased accuracy by 0. they're virtually the same. Now, obviously, we have bigger jumps than that too. We have Gemini 1 Pro with 34% mean accuracy, Gemini 1.5 Pro with 57% accuracy. That's a big jump. And as you get towards the end of this curve, right, as you approach 100%, getting the last 10, 5, 1, 0.1, 0.00001%, right, is vastly more difficult than getting the first 10 to 30% right. So yes, sometimes when compute increases by 2 to 10-fold, you get a big jump in accuracy. We should expect that. That's what helps justify the spending, right? It would make no sense otherwise if models weren't getting any better. Let's call a spade here. Do you think people really care that much about this increase in accuracy? The average person. Obviously, if you're in government making real-time, wartime predictions, you're going to pay a lot of money for every individual percentage point that gets you closer to 100% accuracy. But for the average person, if the model is good enough to give you advice on how to make a workout plan or help you plan a recipe or a trip, I'm not so sure an extra 19% in accuracy is going to be a deal breaker to you on whether or not you want to spend 20 or 200 bucks a month. I guess is my point. So you tell me, would you pay for a ChatGPT, a Gemini, a Claude? If you currently use the free version of one of these right now, if you learned that there was a jump of 20% in their accuracy on the GPQA Diamond accuracy test, let me know. I'd be interested to hear your opinion on that.
These guys are so compute constrained.
Compute constrained. Maybe it really is demand constrained. Maybe it's not just based on how much compute the company has, or rather how useful the product actually is, how willing people are to pay for it. The AI adoption rate in a variety of different firm sizes seems to be starting to flatten out a little bit, which is quite worrisome because valuations are currently based on this line going like this. But again, the brightest people in the space, namely the CEOs of the largest companies in the world, the hyperscalers in Meta, Google, Amazon, Microsoft, they're all spending a ton of money on it. So obviously, they also have some clarity into this demand, and that will hopefully justify all the spending. So is it compute constrained or is it demand constrained? I'll let you be the judge of that one, but something interesting to think about nonetheless.
All of these companies' cash flows are going to start rising. People are comparing it to cash flows. One of those numbers are wrong. It's just the cash flow is wrong.
Why are cash flows important? Why is Jensen talking about cash flows? Well, in short, that's basically why we're seeing companies like Amazon absolutely tank after a pretty solid earnings. Also, Microsoft basically straight down. This is largely due to the fact that these companies are spending so much money on AI capital expenditure build-outs that their free cash flow, the money that they have, the cash that they are generating after operating expenses, in other words, paying to run their chips every single day, and capital expenditures, in other words, buying the actual chips and the infrastructure up front, is now making their free cash flow a lot lower, and in some cases negative. Amazon is going to potentially see negative free cash flow of 17 to 28 billion. Google is going to plummet 90% from 73 billion free cash flow in 2025 to 8.2 billion. Meta is going to drop 90% as well before going negative in 2027, 2028. If we go straight into the heart of the financial statements, operating cash flow for Google was 165 billion for last year. When we subtract out what they intend to spend this upcoming year, $185 billion in capital expenditures, you can see how this starts to get dicey. Investors start to get afraid. Hey, they're spending a ton of money this year and generating no cash flow, leaving you less margin for error in the future, less money to pivot in the case that overinvestment happens and things go wrong. We're going to get into that in a little bit more detail soon, like the dot-com bubble, like the dark fiber era, right? Are the dark data centers coming? But the point is, investors are scared of all this investment because they're not seeing the return on investment. Yes, it's a promising sign for companies like Nvidia because let's be honest, they're going to get something like I don't know, 50 to 80% of this spend. Like, the amount of revenue they're getting from this is absolutely absurd. But the actual companies buying the Nvidia chips to produce intelligence that's going to be sold in the form of some service like AWS, like optimizing Meta's ad system, like Microsoft Copilot. Those things are where you really start to see the risk. Are consumers going to pay for it? We don't see it with ChatGPT. Is there something more useful coming? We'll see. It seems like companies like Google have an advantage over ChatGPT here because they can just integrate this right into a software suite that everybody owns anyway. Either way, we're literally seeing a doubling in the capital expenditure. 185 billion this year, 91 billion last year. More than a double. That is crazy. So will cash flows turn around like Jensen Huang is suggesting? He has better visibility than we do, but again, kind of a salesman for AI in the same breath.
Well, and we're seeing it already moving the earnings of Meta. Nobody uses AI better than Meta.
Yeah, listen, I know what you're thinking. I was skeptical too when I heard Jensen say that Meta, out of all companies, is the company using AI the best right now, but it's actually facts. They literally overhauled their entire advertising system in favor of an AI-based recommendation tool, which, if you didn't know, is literally every dollar of revenue and income that Meta makes is from advertising. So this was a massive change. They changed their entire core system that makes them all of their money. You can see a summary of some of the things that were changed right here, how they optimized it. But the primary takeaway is that we have to be in agreement with Jensen Huang here. We're going to go straight to the source, straight to the financial documents. That's what we do. We look at the data, no BS. And here's the bombshell right here. Ad impressions, or when a user sees that stupid ad pop up on their feed, that grew 12% year over year in the average price per ad. In other words, the more money that they can make, the more profit they can squeeze out of all those businesses advertising on their platforms, namely Instagram and Facebook. That grew 9% year over year. We're talking about a company that made $201 billion last year using an AI-based advertising retrieval system. That's absurd. And immediately I was thinking, well, what about a company like Palantir? I mean, they help governments go to war. They do some pretty cool stuff with AI. Surely they're the company using AI the best. Yeah, there may be a case that Palantir's AI is used for more useful things, but at the end of the day, the money, 200 billion to Meta in revenue over the past year, 4 billion to Palantir. So I think we can crown Meta the winner for now. Jensen is speaking facts here. Meta attributes basically 100% of their revenue to AI. 200 billion beats out 4 billion every single day.
It's incredible that OpenAI and Anthropic are $20 billion run rate companies generating profitable revenues.
Profitable? Are the profitable revenues in the room with us? Profitable revenues. Anybody? Does anybody know where the profitable revenues are? I'm not exactly sure what he's talking about here. If you do, let me know, but I'll show you what the data is telling me at the very least. This article right here goes very in depth and deserves its own whole video, to be completely honest. But in the spirit of keeping this video somewhat manageably watchable and on the shorter side, basically the author just went to the financial statements, went to the data like we've been doing in this video, but he just compacts this in a way that makes it very easy for us to just say right now that profitable revenues, I genuinely can't even fathom what we're getting at with that. No, OpenAI and Anthropic are not generating profitable revenues. They're so far from that. And I was thinking, like, maybe that means the profit that they could generate on a given token, I guess, could be positive. But when you average them out, obviously they're not profitable tokens. The operating expenses of all these chips that they're currently running, and obviously their free users, 195 million, 95% of the people using ChatGPT are absolutely ripping them. OpenAI is hemorrhaging approximately $11.5 billion per quarter. Again, straight from financial statements that are available today, online, $46 billion annualized. The company now spends $3.30 for every dollar that it earns. And there's projections that their free cash flow is going to be cumulatively negative 143 billion through 2029. No startup in history has operated with losses on anything approaching this scale. We are firmly in uncharted territory. So can somebody help explain to me and help me understand, maybe I'm missing something obvious, how these revenues are profitable from OpenAI and Anthropic? I mean, I don't even understand. I can't even begin to get what he's referring to here. If we go straight to OpenAI documentation telling us about what tokens are, let's go all the way down to the unit economics, the token economics. Are we generating profitable tokens? Even then, if we have 900 million users, again, 95% of them are free, so they're hemorrhaging free tokens to all free users, obviously. Let's assume that every user uses like 2,000 tokens a month, I guess. That's a hard estimate to make, but basically that's 1,500 words, including your input question and the AI's output to you. We're not even gonna consider the unit economics of using their best model, which is $21 for 1 million input tokens and $168 for output tokens. That's insanely expensive, but that's for the pro users. Let's go to ChatGPT 5.2. Let's assume that this is the default model that free users are using until their token limit's up. So again, per 1 million tokens, we're just gonna assume, let's make it easy, 1.75 plus, let's just say $2, $16 per 1 million tokens, $16 per 1 million tokens equals $30 million a month, which obviously be 360 million a year, just to service like the lowest average assumption that we possibly could make when we're talking about how many tokens could be used by their free users. But the point is, the cost to OpenAI on a token economics level, the lowest level of economics, which really determines everything up the food chain as well, right? Your overall revenue obviously depends on how you can produce revenue at this level. It looks so expensive. Please, someone help me understand what he's talking about with profitable tokens. Put your Venmo below. I will literally pay you money to explain it to me. Like I'm a little child that doesn't understand a thing in this world. Basically, all he does for the next 2.5 minutes is talk about how cool AI is. Holy f***ing AI ad, get off my screen.
We just built an app.
We went through an inflection point because these tokens became profitable. And so we just have to make more of it.
Again, link the Venmos. Link the Venmos, I got you.
It's good to always reflect on history. History informs us, but history doesn't repeat. And so you have to take into consideration what's actually happening. Always go back to first principles and think about what is actually happening.
I believe it's history doesn't repeat, but it often rhymes. I mean, isn't that kind of the point? Like, a lot of the similar cycles happen over and over again. We'll get to that in a second.
Fundamental difference, a huge difference between now and some things that happened in the past with the internet. There was a ton of dark fiber. There are no dark GPUs. 100% of the GPUs are rented.
This topic of dark fiber, the result of the dot-com bubble, in other words, this deserves like a whole nother 1 hour analysis. But let's just quickly run through why this comment in prefacing what he just said with history doesn't repeat is kind of funny and ironic, because you could use it in the exact opposite light, right? The dot-com bubble isn't going to repeat itself in the same exact form, but it might rhyme in some way, perhaps through an AI infrastructure build out. Let's talk about it. If we want to connect the dot-com bubble to today, all we have to do is talk about the infrastructure that was required or thought to be required during the build out of the internet. The internet economy was in practice a massive archaeological project where basically there was a massive spike. You can see right around 99 to 2002 of internet companies, of websites. Remember, the internet was brand new and everybody wanted their website. Everybody wanted to sell online because it seemed like the next era of a technological revolution was here. And so everybody and their mother got online, started creating websites, so we needed more infrastructure to be built out. We needed millions of miles of fiber cables to be laid out underground to allow internet connections throughout the country, throughout the world. But you'll notice there was this flattening out. And obviously nowadays this number has absolutely ballooned. What we thought we needed back here, in reality, we didn't need at all, because none of these companies were generating any money. The 1990s fiber glut is what they called it. A massive overbuilding, uncertain demand, and bubble risks, despite prevailing faith in long-term growth. Again, I don't think anybody questions the long-term potential of AI technology, what it can do for people, what it can do for machines, what it can do for the world in general. But at the end of the day, if the companies that are using this artificial intelligence, using the internet, aren't making any money, then you can't continue to spend like drunken royalty. Overspending, overbuilding creates bubbles. And this dark fiber that we're talking about is cabling that was built as infrastructure for the internet, was just not used because companies couldn't afford to use it because they didn't make any money. And this is exactly what people are afraid today about GPUs, about data centers. And yes, Jensen says specifically,
there are no dark GPUs. 100% of the GPUs are rented. In fact, GPUs that we sold 6 years ago, the prices are going up.
So what Jensen is saying is, it's true. Right now, there isn't a dark GPU. But at one point during the internet build-out, there wasn't dark fiber. The point was we were anticipating all this fiber to be used, which, to be fair, most of it is used today, ironically, for data centers. But this build-out was so intense, it left behind $12.4 billion of debt and thousands of miles of dark fiber. By 2004, so post-dot-com bubble, post-internet crash, a lot of zombie companies not making any money go out of business. Prices to use this fiber roughly fell 55% year over year. Only about 1/10 of the installed fiber was actually being used. In the early stages of the dot-com bubble, of internet companies needing more infrastructure to be built out to get in front of the faces of more internet users, and hence make their website bigger, increase their chances of getting sales on their website, they weren't making money. But at one point, they were using the fiber that was available. It just got to a point where we overbuilt, and it's ironic now that we are using all of that infrastructure. But yes, it is true. GPUs 6 years ago are going up in price, which is absolutely absurd. These are depreciating assets, so the fact that they're increasing in value, increasing in rental prices, straight up silly. But you know, the fact that we have like 10 to what's going to be 20 times the amount of data centers that exist in a country like China is definitely showing you that we're building a lot. Will it all be used? Will eventually these AI companies that aren't making any money start making money? My bias says yes, but right now it's crazy to say they're profitable revenue generating companies. I mean, come on, what are we talking about? Again, this topic could use a whole nother video. Obviously, there's a lot of differences between now and then. That's why I preface this conversation with history doesn't repeat itself, it often rhymes. It was weird that Jensen said history doesn't repeat, it informs us. But yes, it rhymes. That's the whole point people are making, right? That it's similar-esque. Yes, the companies spending the most money today are the companies with insane amounts of money and insane cash flows. So it does make it seem more sustainable and realistic. So in conclusion, I'm biased, right? I invest in these companies. I'm an engineer who believes in this technology to be the path forward, and this industrial revolution is obviously massive. But I tried to give as many unbiased counter arguments to the things that we saw Jensen Huang bring up. A lot of this isn't based in facts, it seems. A lot of this is more a pitch for believing in the AI infrastructure build out. And I think the investment thesis is still very strong. We are seeing some fundamental issues and cracks like private credit pulling out of some AI deals. That's definitely not good for companies like OpenAI who need to continue relying on money from private credit and from massive companies like Nvidia, Google, and Amazon. But for a company like Nvidia, I mean, they're going to absolutely annihilate earnings. Wall Street, again, continues to miss on expectations over and over again. People still underestimate just how insane the demand for GPUs is and continues to be. I will say, I think the biggest risk factor for the AI investment thesis as a whole is something we didn't even talk about in this video, is the potential for another DeepSeek moment, right? Another large language model that's based on something fundamentally different than the way that LLMs currently operate. In very simple terms, to get to this vision of AGI or whatever Sam Altman wants to call it, whatever you want to call it, doesn't really matter. To get to AGI, we're probably going to need something other than just some pattern recognition system. That's really all AI is at the end of the day, right? You query it with a question, it's trained on the ridiculous amount of information that's available all across the internet, using the power of all these GPUs to read through paragraphs, research reports, news, social media, everything. It analyzes those patterns and predicts what would come next based on the context that it has. I think if we see a different system come along, which I think is inevitable at some point, I think the software and algorithms that we currently use are going to change and evolve with time. Jan LeCun, who's a pioneer in the field of AI, he believes it too. This method that we have today isn't what's going to get us to that next level that everybody wants to get to, AGI, superintelligence, whatever. We need something better. And when that something comes, we're going to be able to produce far more efficient intelligence. In other words, we're not going to need as many GPUs, as many data centers as we need today to get to the same stuff, to get to the same good responses, even better responses eventually. But obviously that's all hypothetical. That could never happen. I think it's probably inevitable. Again, one thing I always go back to, as long as the people with the money believe in some thesis, believe that the spending continues to make sense based on the demand that OpenAI and Anthropic are seeing, then yes, it makes sense to spend. They clearly believe that OpenAI and Anthropic are going to be some of the most profitable companies in the history of humankind. Then that's why they're going to continue to build out and invest so heavily in this technology. So for the time being, I think the investment thesis still makes a lot of sense. The spending is absolutely insane. Is it sustainable? Jensen says yes. I tend to believe what Jensen says because he's been very right about the past when everybody else doubted what he was saying. Let's hope that the data center infrastructure doesn't go dark like the dark fiber did in the internet.com bust. If you made it this far, that's absolutely incredible. Comment below and let me know what you think, because this was a long video, a lot of information to cover. Thanks for watching. Bye now.